So swing trading, it typically lasts several days when you're holding any position, although it can be very fast if you get a good influx of market sentiment. Essentially market news coming in and pushing the price the way you want it to go, or perhaps the way you don't want it to go. Now, of course, whenever we're hedging, as per the trading mentor method, we don't really care what way it goes. We don't really care how long it takes because we've got a diverse portfolio, typically risk-averse assets, mixed in there somewhere. Now I'm going to show you a live simulation. Again, I've done many of these. You'll notice every single video I'm ending in net gains overall, and you will have noticed my drawdown is staying very low no matter the market swing. If you can do that, if you can master that, then you really shouldn't have a problem printing gains over the long term. So again, if you want to learn how to do that, just go underneath the video. You can see our free Discord and also how to get into our private trading room where we teach live and post charts every single day. Let's crack on with another simulation now. Let's crack on with a nice swing trading session and do a bit of swing trade hedging. To begin with, I'm going to pick a date in the future so we can get some price action levels printed on the chart. Of course, I'm using Forex Tester 6. If you want to learn how to trade for income, as our full-time income traders do, go underneath this video. You will find a link to join us in our trading room every single day. We go over charts live. We teach you how to hedge to protect and essentially how to gain consistent income over time with a low drawdown. So go underneath this video for that. We also have a free Discord you can join as well. So we're just loading the price data. Again, like I said, it's just so we've got some price action to go off because that's going to form the basis for our entries, our exits, and everything in between. So you can see at this point what we have is several years of data. Clearly on the long-term basis, we are climbing to the downside. Okay, you can see that via these lower highs, and also you do have lower lows. Now, if this was to be a parallel channel, obviously you would have to move these around. But as the general idea is going to go, you're seeing it to the south side. Now, as I do in these videos, just to keep everything nice and simple for everyone to understand, some people have tried to hedge rather than using stop losses before. Some people are inexperienced, they've never tried it, and it's something they've heard of. I will say it's easier to manage, it's easier to understand, and it's less work. If you want to use stop losses, there's a whole ton of caveats to doing that versus hedging. So I'm going to make it as simple as I can. And particularly to do that, we're going to have to discuss sizing. Now, make sure you watch this to the finish so you get the whole rundown and the whole experience. Every video I post, every video I do, you'll see me end in net gains as I control my capital very well. So on a 100k account, to keep things simple, we're going to have a maximum size of one standard. So at any time, I'm not entering the market more than one standard on any position whatsoever. That's going to be the maximum size I'm willing to take because there has to be a cap. At the end of the day, if you want this to go well and you want to be able to sustain yourself, given your positions are going to run into drawdown because you're not using stop losses, then you cannot afford to take humongous sizes. It just won't work like that. So we're coming to reasonable resistance here. We've already had a bit of rejection, but we haven't fallen very far. So that tells me we may be in for just another high. So for that reason, I'm going to not short a full size, but rather I'm going to take something like a 0.35, I'll say, and then I'm going to play. And I'm going to see where I end up. And hopefully we'll be able to find, although we have a very high hit rate generally, we'll be able to find that we get some hedging opportunities. So I can display what it's like to hedge on a swing basis. So on this initial fall, we're coming to reasonable early support. You can see we've got almost 100 pips there in gains. The nearest dip support, if you like, probably exists somewhere around here, but there are some minor levels just here. So I'm going to take those gains. Very nice. Thank you. That's profit one. Now, because this level is not very far off where I just shorted, I'm going to take a small dip my toe in the water long. And if we can rally up to that former level, okay, or thereabouts, I will look to kill this long. Now, in this instance, we've fallen we've fallen and then rallied just to this long zone, and that's why we're now falling away. So I've got the choice. What do I want to do? Do I want to kill it off, perhaps? Do I want to add again, or do I want to hedge short? Now, particularly for me, given this entry confirmation, i.e. we can see the market's already moving a bit, I'm going to hedge this, and I'm just going to hedge it. I'm going to hedge it slightly more than what I bought it for. And the reason why is because now we're seeing a roundup of a downside trajectory over time. You can see that quite visibly from these lower highs and these lower lows. And with that, we've also still got quite a high price. If you look at it on a monthly scale, for example, or even a weekly scale, you can see quite obviously the rally from this low is fairly significant still. We're coming up a reasonable amount of distance. We haven't fallen incredibly, a few hundred pips perhaps. So yeah, I'm fine with the size I took. Now, what you can see is that size I did take has actually ended up losing us money for now. And I can now start to think about what I want to do about that. Now, I can see that this long side entry is in gains. And because I only took 0.25, I think I'll add another little piece. I'll add another 0.1. So on that 0.1, I can close this. And now this is where it gets interesting. We're now falling back near where I previously bought. And therefore, I'm going to take a long for that reason. So what I've done now is I've actually hedged those shorts. The amount I've hedged is obviously not equal to the amount I've got in shorts, but it doesn't really matter overall. Okay. Now what we can see is the price climbing and then starting to fall again. So I'm going to kill that for gains. And I'm not really interested in adding anything short until we can get right back up at this level. Okay, this daily level. So we've poked around it. We've now got a bit of entry confirmation. I've got 0.25 in play. I'm going to add another 0.15. Now you'll notice my sizes are well below my maximum. And it's because the opportunities I'm getting are not, they don't sort of warrant a max size. They're not extremely attractive. There's a good chance, they're going to bounce around, as you can clearly see they have. Now, at this point, we've got 0.4 in play short. So what I can do is I can actually hedge on this early pullback. And the reason why I'm hedging is in case we burst back to the highs. Now, what is going to allow me to sustain myself at any time is the fact that I'm taking gains on both sides of the market. Okay, not only am I taking short gains, but I'm taking long gains at the same time. All right, and now I'm just looking for either a long side exit like this, perhaps, slightly higher at the highs. And I'm now thinking about where I want to add short. Now, to me, it looks a little bit like you're rushing into these highs, and there's a good chance you may actually just extend to the top of this wick. So I'm not going to short really until something like that occurs. And in the meantime, on any fall, I can just think about getting hedge long. So really the edge we've got is, instead of being a swing trader who's using stops and would probably be out several times, we are now just collecting gains while the market runs against us. And because the sizes I took initially are reasonably small compared to my equity, I can sustain that. So for example, that $100 I just took is worth 1/15th or 1/16th of the overall drawdown at that time. So I'm only going to have to do that several times until I've managed to claim back my drawdown there. Now, at this point, we're coming to that key level I mentioned. So I'm going to want to look to add short. Okay. Now, I know that at this point, my equity drawdown is about 1.65%. And that isn't going to be, that's not really high enough for me to not add again. So I'm going to add a 0. I'm going to do it based on the merit of the level, which is reasonably decent. Okay. And the merit of the target, which is probably going to be a swing back to a key level like that, which you can also see here. All right. So my target is slightly lower on a swing basis. Again, if you want to understand targets and things like that, then you are going to need to understand our rules fully. To the naked eye and most people, it doesn't look reasonable, but to the experienced, it absolutely does. So I can take $286 there, okay, and I can hedge lightly long. And I'm only going to hedge 0.1, okay, because the market is still very high overall, okay, and the chance of falling is higher. So $60 there, very light hedge long gain. But like I said, I'm collecting profits against the run of play, if you like, on my other short positions, which allows me to sustain myself, as I also mentioned. So I want to sustain the drawdown. At any time, my job is to keep the portfolio safe, protect capital where possible, and end up on top. You can see the $200 I've got there again. If you factor in the hedge gains I've just taken, we're looking at a quarter of the overall drawdown at this point. So because we've hit this level a few times, I'm just going to make this a 0.2, and I'm going to play. And coming back to that target level below where you've got that long side, okay, I'm going to have to exit it late, unfortunately, because it played so fast. But that again is a decent exit for a short and a decent hedge long. Now we're really pushing straight back into these highs. So instead of being viciously short, I'm going to be fairly tentative and a little bit careful, because there's a fair chance you may just keep rallying based on the evidence you can see. Can you see how there you go. It's just hitting those highs. And now really I want to identify the next key short zone. Now, because we're going quite a ways back in terms of time, I'm going to have to use the monthly. You can see a key level labeled there. Our new key level is there, okay, for a short exit or a hedge long. So if the market pulls back to that, I'm going to take a very light early hedge long, okay, and if we keep going up, there's some more gains to take. So again, the equity drawdown is 1.7%, but you'll see overall we end up well in gains because of the fact that I'm able to sustain my equity on these kind of moves. Okay, so market is trying, its hardest, and I'm probably just going to take a 0.4 there, and anything pulling back to here, I can look to potentially hedge, exit those shorts, and everything like that. Okay, so brilliant short, large gain off there. Equity drawdown is almost in plus, and I can now reflect on the state of the market. Okay, we've got a reasonable fall here, so I'm going to take 0.15. That hedge is going to be, well, if we scroll up, we can have a look. 0.15, 0.25, 0.4, 0.5. So the 0.15 long, okay, is just over a fifth. And I'm going to exit this light short I had because there's no need to hold that anymore. Okay, long side gains there, 145. Okay, and we're almost back in our positive territory, which is what we're aiming for. Now I can look to short this because there's likely a level just above. You see that there? So I think you may get a little bit higher. There you go. And then potentially fall if not. Okay, so this is going to give us some good perspective. Our equity drawdown is now climbing. Generally, on a whole portfolio, the max equity drawdown you would call your cap or your limit is 10%. I'm now at 3.5%. So I'm still willing to add short. I'm not really willing to remove anything I've got wrong at this point because there's no need. And I would say I'm definitely still willing to hedge and reduce. So I'm going to take something small. Okay, 0.15 again, because we come up to a very, very key level and we've just managed to fall. So the key level I'm talking about really is somewhere in there. That's my long hedge to protect against everything else. So the fact that I'm down $3,665 in play, if you like. So we've got another fall here. All right, now I'm going to add another little piece again. And then any rally, I can exit. So I'm not getting a rally at the moment. but this is going to give me the means to take shorts. And essentially my new shorts I'm taking are going to be hedging the former longs. Okay, so that short I just took is essentially a hedge on the former longs, which I probably could have exited one. Okay, so now I am in positive territory. Okay, and I can think about adding long on a further fall. I'm just going to delete all these lines so I can get a clear perspective. The long side swing zone I want is there, and I'm going to hedge. Well, I'm going to take another light short on a slight push up like that. I'm going to take a 0.15. Now at this point, because the trajectory of the market is heading down and my drawdown is sustainable, we're in positive equity, I'm going to remove the top long. So the long at the top we had. So I took a loss, my first loss, but it suits and fits with the trajectory of the market, because if that long keeps going up, I've essentially just got it back and I'm no worse off, really. Overall, my equity drawdown is still pretty low. So because it's climbing a little bit, I can add a 0.25 and I can kill that for some nice gains. I can look to potentially get hedging because of the overall drawdown on the portfolio. Can kill that off. I can look to reshort, keep it light because the push isn't very far, but it does reflect the weakness. Kill that off. I can kill this off. Okay, and now the equity drawdown is climbing very nicely. We can look long at this level. Okay, and we can proceed. Any push and I'm out there. And now you can see the market tentatively falling lower and lower at this point. So I could actually add a 0.2 because it's not quite at the highs. And I can kill that, 350. And I can add another hedge long just to protect that short exposure. And then now I can start to think about reducing my short exposure overall. So my lowest short at this point is here. The market is slowly pulling down. All right, but it is still uptrending largely. So I'm going to sacrifice some profit and take that out. But I'm still in that positive equity margin. I can still now put the size up because I've just reduced my lower exposure, so I've got room to add. And any more vicious fall lower, I can kill. Okay, so I'm out. Brilliant. Take a light hedge here. Okay, so that failed, but I can add again. And a higher push, and I'm out of both. Thank you. Good stuff. Okay, and I can add again, 0.25. And push down lower, and I'm out. So now this is where you get the highest gains generation, because you can see there's a level there and a level there. Now, because the market is still somewhat high, my long side bias is definitely going to be lower than my short side bias. Okay, because the room to fall lower is higher statistically than the room to move higher, if you see what I mean. Bit confusing, but basically what I'm saying is if we fall under this level that we're at now, there's a hell of a lot of way to go. But if we short up here and keep going up, it's less likely that's going to happen. So the downside risk is not as great. Again, the hit rate that we experience within our method is so high because of our level spotting strategy, which is quite unique. A lot of mentors don't teach that, but we do for our VIPs quite frequently. So another gain there. So really nice gains generation. And at this point, I can decide really what do I want to do? Do I want to keep swinging? Or do I want to close out my former exposure? So at this point, do I really need to close those shorts? I mean, are they a million miles off? Maybe not. But it does give me the opportunity now to at least move the cycle up. So what I mean by that is if I close this one, my equity margin is still high and I'm not a million miles off
my former short. So I don't need to go crazy, hedging or reducing or worrying about drawdown particularly. I mean, in any case, I'm stimulating a lot of gains anyway. But really, we want to see probably a larger fall for us to get anything real. So still teetering around. I think the market will come higher. I'm going to take an initial light hedge just to be careful. Okay, and I'm out and out. And that initial light hedge is fine where it is. Can take a 0.15 and we're still going lower. So now we may get an idea of what a short side hedging cycle will look like on these former longs. Okay, so you can now see we're pulling away. The drawdown's growing. Obviously, we're still in a very large equity drawdown. Okay, I can add another 0.3 perhaps. So I'm going to leave that short on that we've got as a means of protection. Okay, there we are, so $400. And I really want to look, well, where do I want to add the next long? I think probably just a bit lower if we can get it. Now, because I added a 0.3 there, I'm only going to add 0.15 because we got some gains in the bank already. Okay, and now what I'm going to do is I'm just going to take, I'm not going to take an early hedge yet. In fact, I will because the market is looking unstable and weak. Okay, and at this point, I could take the decision to take an early hedge. Now, an early reduction. What I will do is actually reduce the largest position because it's got the most danger. Probably if the market is going to complete and go down here, which wouldn't be absolutely shocking. But this is ideal long. So I'll take this long 0.4 and any larger move. Okay, that's probably as far as we're going to get. I'm out. Now what I'm going to do is I'm going to look to hedge those former longs because if the market is going to tank, which it hasn't, obviously, then, I want to be covered. Now, at this point, that hedge, and we'll take another one. Okay, so we're now more short than we are long. But, I really could have taken some of these long, actually. If it does fall, no, it hasn't. So if we keep going up, I'll kill the longs. Keep going down, I'll kill the shorts. So market starting to uptrend. I can kill that. I can add a light long there again because it looks a bit ugly. Kill off that one. And I will actually just add again, but with a slightly lesser size. Okay, so that's that. Now, are we at a key long zone? There's something. It's not amazing, but, it will do. Okay. Now, what you should note as well is throughout this, just understand that the cycle we've traded is massive. The distance we've just gone without any threat to the drawdown. At no time did that drawdown get dangerous. Okay. The size we've taken hasn't really gone over 0.4 at any individual time, but remember we're spreading out over time. Okay, so it's one standard ideally per sort of 300 pips or something like that. I mean, obviously your risk plans would change based on your portfolio, your equity, your skill, everything. But if you look at the earliest trade, was it here? So we haven't even gone that long, really. I mean, so it's going, yeah. So the earliest trade is here, okay? Jan 2011. So, and the peak we got was all the way up here, okay? So that's 132 to, what price is this? Almost 150. So almost 17,800 or 1,800 pips. And the max drawdown there on the equity is 4 or 5%. That's incredible. I mean, most traders would almost certainly bust. But it's because I'm protecting my capital early, and the sizes I'm taking are sensible. They're sensible based on my equity. Okay, that's what all of this is about. So if I'm looking to spread one standard over 300 pips just to stay safe, you can obviously see that the stretch on the entries I've taken is so wide. Okay, between 142 and 135, 700 pips. I've got hardly, well, is that even a half? It's about a half a standard. Okay, so massive stretch, but it is allowing me to survive very well. Of course, if I up the risk, then you may make more gains, but you would probably find that drawdown also increases. So on things like this, I've got room to add long. Okay, and I may just add a light bullet there. Okay, a little piece. This short is now pulling us down. And now I can decide, well, do I want to add again? Well, okay, what's the drawdown? It's okay. It's a reasonable level. I'll take a 0.25. And now the drawdown is coming up. So if you exclude the equity drawdown, now we can decide, well, when do we want to reduce? When do we want to hedge? So at this point, let's say that's 6% of the starting balance, starting equity. I would probably consider thinking about covering a bit, so shorting a bit where possible, and also moving a few things off because the drawdown for me is growing a bit too quickly. So I'm going to close that 0.25 I took, and I'm not going to hedge again just yet until now. I'm going to keep it light. Okay, and now I'm just going to get a little bit back here and there to sustain myself. Okay, because I know if this keeps falling, it's already gone a decent distance, but if it keeps falling, I'm going to have problems. Now, my exposure is 0.25, 0.4, 0.5, 0.65. Okay, so any hedge I take, let's say it's a 0.15, it's going to be just under 1/5 of the total exposure. Okay, which, to be honest, is probably going to be reasonable as a means of taking this drawdown down, if you like. So I can take, let's say, a short side entry there, and then I can plan perhaps another one there. So at this point, I've got 0.3 of my 0.65 covered. If I exit that one and I exit that one, the drawdown has effectively reduced somewhat. Okay, it's now growing, obviously, because the price is coming away, but I'm not losing what other people are losing, if you like. Other traders are losing at a complete rate of what they've entered, whereas I'm not, you see. I'm losing a lesser amount because every time the market rallies and then falls, which it does typically on Forex markets, especially, I am finding that I am, accumulating gains as time goes on. So, for example, in this instance, we've now come off the low about 126 to 131. Okay, we've got lots of exposure to the upside, but I could now consider perhaps closing one of these out. Okay, so I could close perhaps that one, and you can now see the drawdown comes down, the equity drawdown is still fine, and I'm in a much better position where I don't really need to hedge unless we get a lot higher up. Okay, so at this point, I've got 0.3 in play. I can actually consider just adding maybe a 0.1 at this early resistance. And then after that, I'm really just looking to kill some longs. And after I've killed those longs, I can space out those shorts that I want to take. Okay, so let's see where we get. So I've got hedge gains there, very, very light. I could even add long if I want to, just lightly, because the drawdown is growing on the long side still. Okay, $180 there. Nice, no problem. I could add again, just make a little piece of a 0.1 at this point. Just tuck a little bit further in. And then any real push up, I can kill that for long side gains. Okay, so now we can look at reducing the long exposure and also looking to add short. So where do I want to get short on a swing basis? Well, I want to do it at reasonable swing areas. I can't really see anything that decent until much higher up. Okay, So I'm going to leave that long and I'm not going to add short. If we push up, okay, so now I could actually add a light long 0.1. Again, I'm keeping it light because of the risk of the market now. And I'm just going to kill that short because it's not necessary to have. And now you can see my positions are fairly close together. And I could actually look at removing this, okay, just to be safe. And now I'm in this cycle again where, I'm looking to close any long to the upside. So I'm not getting that yet, but I am getting a full to reasonable level, and I've just reduced my long side exposure, so I'm happy to add a 0.2. I can take that off. I can add a short 0.2 because the market is at a median, if you like. Can close that for $300. I can add a 0.1 because this level is decaying. Okay, a little bit of movement up there, $100, that's fine. I can add a 0.1. So really the positions are a light on purpose because I know if we're going to stretch that 17 or 1800 pips, I only want 3 or 4 or 5% drawdown perhaps on one asset because otherwise it's unsustainable. If that was going to be 50%, what's the point? You'll get a margin call and that'll be it. Be over. So, that's not wise, basically. So at this point, I've now got the choice again. I could wash that long side entry away, or I could just continue where I'm going now. I could take, let's say, what we got left. I could take so we've got 0.15253545. If I get long now, I could say, okay, I'll do it at 0.2. I'll kill off the former short. So now at this point, I've got no short exposure. But if we do keep falling, I can just think about reducing and hedging immediately because the drawdown is going to look like it is now. Okay, but you can see any market swing is not a problem. All I'm doing here really is just managing my capital. Do I want to hedge again? Sorry, do I want to add again given the drawdown? Not really. Do I want to hedge? Yeah, I do. Okay, $100 there. So instead of losing, or instead of having a growing drawdown, or alternatively having stop losses and losing money, what's happening here is I'm progressively gaining back hedge gains. Okay, every time we swing to the downside, I'm making money. I'm not losing it. You see. So the drawdown isn't particularly realized. And that's what gives you the edge when you're hedging, because instead of being stopped out, which is, the end, if you like, you are now in control to some extent, even if the market goes against you. So it doesn't really matter what happens now. I can rebuy again because I removed that other one, and I can wait for hedging opportunities higher. Okay, the drawdown is going up, but again, I can hedge. And note as well how far the market is falling without stopping us, without ending us, if you like. I'm still in positive margin territory, still. Okay. I don't have to be concerned. I could effectively reduce this if I want to. I think I'd rather do it higher up. But I can hedge here at this early resistance. Will we get a fall? I don't know. But if we do, it'll be good. If we don't, it really doesn't matter because all that's going to happen is my long side entries I got wrong are just going to be less in loss. So I can only be better off if this rallies and takes that short hedge out of the money more. Okay. So you can see I've now got another short zone up here, which I can take, right? So on another fall, I can exit those shorts. And if we don't fall, like I said, my longs are getting better off. And now what I can do is, because my drawdown is improving, I can effectively stagger those entries. Okay, so we're now going up. I can kill off that long, and my job now really is just to hedge the shorts. I mean, at this point, the exposure is fairly even, but if I get a dip like that for 0.2, okay, then I can do as I will really on any real vicious fall, and the same for a strong rally like this. So I can probably clear the whole drawdown out now on this next upcoming cycle, and I don't even need to change the time frame. Probably just do it on the weekly, like you can see. Every single trade I'm taking gains on, is like 5% of the drawdown or something. Okay, so I mean, how long is that going to take? What, 15 trades? Let's say the market goes sideways like it is at the moment. It's only going to take me 15 of these or less to just wipe out the whole drawdown. And that's why not using stop losses is great. Because on a range of a couple of hundred pips, like this, you can clear out your entire drawdown. And when the market does go against you, you don't lose everything. Okay, because you're sensibly placing entries, and as well, you're hedging to protect your capital, wherever possible. Okay, so this is another long zone. All right, like that. Any push up, if we can get it, and I'm out. So I've almost recovered this $3,600 or whatever it is quite easily, really. I mean, we can take perhaps another light short, anything up top, and I'm out. I'll just kill it. And at this point, I can decide, well, what do I want to do? Do I want to reduce? Do I want to get rid of that top, that 52? Okay, so 850. Okay, fine, done. Do I want to reduce the lowest 80 for 870? Maybe I'll let the market drop a bit. But at this point, I'm really in no danger, and it doesn't matter how far the market goes either way. If I wasn't being so conservative and reducing so early, the gains would go up, but I wouldn't have been able to have 4 or 5% absolute max drawdown on these incredible swings. Okay. So we're coming up to this former long, a little bit of a dip back off it, and we're still quite close to that long, so I will take 0.1, and we'll see where we can get with that. Okay, so we're now coming back to this short. We really want to just wait until it goes either way. Kill that one. Boom. Do I want to add a short? I can, perhaps. Okay, so short, we've got 0.45. I could add perhaps a 0.25. And we can hedge long on a fall. So a bit there, a few gains. Where are we up top? The levels are slightly higher, I would say. So I'll take a short now. Can also just kill off this long we're out the money on. So now we've got no longs, and we're going to hedge long on any vicious fall. Okay, so you can see again, once again, the drawdown comes up. We've been trading this sort of swing for a while. I'm going to take a light long in case we don't drop. Okay, so we are dropping. Not enough. Okay, so I'll kill that off, limit the exposure. And again, the process continues. A larger fall will warrant a clearing up, I would say, over here. And an addition of 0.15. Now, if I'm looking really to close this cycle out, which I could do now, I could exit everything still for gains. I want to look for the optimum time to do that. All right. If I pull that short off, let's say, it's going to cost a bit. So I probably wouldn't want to do that just yet. But any further push down, and I really don't have much long side exposure. I do like this as a long again. Okay, so any push lower, I mean, you've really got the opportunity now to kill this. So now there's a limitation on the shorts, and any push up, well, that would have been great to kill long, but any decent push up, and I'm just going to wipe out some long exposure. Okay, so now the drawdown is very low, and if I'm looking to exit the cycle, I'm going to need a push to the upside. Okay, so now we're at a median. If I killed all this off, I would just be out for net gains overall. Like I said, because we've kept the drawdown extremely low, it's allowed us to sustain ourselves quite easily. So at this point, if I just close everything out, okay, I'm now out for gains completely. And I can do this forever. The gains, like I said, are lesser because the drawdown has never been anything considerable, 4% or something like that. And that is on any market move, practically any market move. Look how big that swing is. We've sort of done this, without 4% plus drawdown, really. It's just like incredible, sort of 3,000 pips, and you're never in trouble. It's a better way to trade. So don't forget, if you want to do that, go underneath the video. You can join our free Discord. Also, talk soon.